Okay, so this stock went up like a gazillion percent today. It's all the rage. It's sexy. It's tech. It's whatever. And I have absolutely no interest in it. And you're going to see why it's very obvious that if you're young and you're into making money, maybe you should be looking somewhere else. Hi there, this is Fabi from The Next Big Rush, and today I want to talk about Fitbit. Yes, Fitbit, the stock, not Fitbit, the actual product where, you put your little watch on and you can work out and it tracks just absolutely everything. Not hating on the product, I don't mind it, I don't own it, but the product isn't what is going to make you money. Let's face it, if you go out and just buy a bunch of Fitbit, that's not going to change your life. What's really going to change your life is if you grab a little bit of money, invest it, keep investing it, rolling it up into a huge snowball so that you can retire with, I don't know, 10 million, 20 million and upwards like my plan is to do. So if you're into making money, then come with me. Let me show you why I am personally not interested in Fitbit and why you should be very, very careful with not just Fitbit, but companies like Fitbit. So in the Financial Times today, it says right here, Fitbit shares leap on bullish review, comma, new device launch. Interesting. Now, when you look at this chart, you have to ask yourself, why have I missed on this huge jump? Look at this. April, they were just about, I don't know, 460 right here. And now they're over $7. That's a pretty decent run. In fact, that's a spectacular run. I don't know anybody whose portfolio wouldn't have a big win with something like this in such a short period of time. Great. Well, what they're forgetting to tell you is that this started in March for a reason. This chart right here. What they don't show you is that whatever came before it makes this look like almost nothing. So if you come down here, they will tell you why Fitbit shares are doing really well right now. They've just released a new product, Citron Research, which is a very respected research company. They put out a lot of reports about companies that they think are going to do really badly, and also some of them that they're projecting to do really well. Not hating on Citron Research. I like their stuff. I like their short reports. But what's happening here is that they're saying, you know what? This stock is really undervalued and we think it's going to go to $15 per share. Well, that's not bad at all. Under $5 to $20. If that happens, it's a huge win. I'll bow down, take my hat off to any win like this, any day of the week. But this sentence here really kills it. Fitbit's valuation has languished since its $20 a share public debut in 2015 amid mounting losses. So I was scratching my head and going, well, this can't be the IPO in March. Obviously, I know that for a fact, but obviously it had to come down from $20. And so I checked it out, and this is what the chart looks like. Oh, this tells you a completely different story, doesn't it? Because when it IPO'd, it immediately went to $32, then to $45, and now this is the huge gain from April till now. It's this little jump right here. If you're seeing this on the phone, you can't even see the movement of my my mouse going over this right here because it's so small compared to where it fell from. So why don't I buy stuff like this? Well, let's be honest, something that IPOs at 20 that goes immediately to $32.50 and that moves up to $45, it needs to come down, you know? I mean, at what point do you think it's overvalued? It was already overvalued right here when it IPO'd at 4 point some billion, and now they're talking about takeovers happening around the $15 to $20 range, but this is many years after this IPO. And what really sucks and what kind of breaks my heart, and it's just life, okay? You're gonna be on both sides of the trade every now and again when it comes to this, but at the very top here, that's when the most amount of people buy. You know, that's what makes a top. The top is made by a lot more money coming in here and wanting the stock so desperately that they push the price up. And so most people have lost a ton of money on Fitbit, but that's not even why I am not interested at all in Fitbit. And let me tell you why very quickly. The reason why I don't buy stocks like this is when it's hot at the beginning, it will fail. And I am not smart enough to go up against analysts who actually know Fitbit back and forth, people who drink beer with the Fitbit founders and CEO and everybody else. They know the stuff that would have made a great trade here, shorting it, or even going long down here. I am not smarter than they are. So what I do is something completely different. I take things that have this downturn because their whole sector is down and they're on their way up. So I don't mind a stock that goes from 47 bucks to 450. I love that. But I only love it if there's a good reason for the underlying stuff that they're selling to be way more valuable in the future. And I don't think that tech has that. With tech, you either buy it before the company goes public or you have to pick your winners and losers. And tech is not cyclical. Tech is always what's hot. That's the definition of tech. It's whatever is hot right now is called tech. That's what technology means. What's cutting edge right now. So unless there's a good reason to believe that, I don't know, the government is going to come in and say, hey, you're going to pay less in taxes if you can prove that you're healthy and everybody's going to buy Fitbit, then it's just not interesting to me. There's not a cyclicality that is going to make this go up again and then down again and up again and down again, because that volatility, that's how I make money. That's how a lot of my buddies make money. And so this is why I'm giving Fitbit a hard pass. Now, do you want to know what I do with my money? I put my money into things that are already at this stage. I'm the person buying all the stock down here and over this little bump here maybe, but I'm not this kind of trader. I am long-term buying it down here if and only if I have a strong reason to believe that this is coming back. I've done this a few times with a few stocks and I am doing it again. So just a quick example of a stock that I bought a while ago, and I actually made a video on this channel to say, hey, I think this is a great stock and I'm buying it. Ivan Whole Mines. If you're in mining, you know the story already. You're probably sick of hearing this, but this happens again and again and again in this sector. So I bought it at around $1 right here. I think it was just under it, maybe 98 cents, something like that. And this is what happened a couple of years later, right here. $5.25. Not bad. I didn't sell it at the top, but I sold it somewhere around here. So yeah, this is my kind of thing. This is what I try to grab, and I don't care that it came down from, pretty much the same price. Look at that. Huh, interesting. Double top. But this is what I'm looking for. Okay, so now you know. And the reason why all of this is happening right now is because, well, I have much better places to put my money in. And if you're curious to know where I'm putting my money in and how I'm making my little snowball of money grow over time, then you can hit like and subscribe, mostly subscribe, because then in the next few videos, I'm gonna be showing you what kind of stocks I like to buy and what kind of stocks have actually done very, very well for me personally. That's it. Thank you very much. Take care. Oh, this is so strong. I might actually have to record this high.